Hello traders, welcome back to another YouTube video. So I have not posted on YouTube for a while, simply because I am focusing on helping a small group of traders that I want to help develop in their understanding of price action. And we started last year, September. And I did continue to post on the YouTube up until December, but I decided to take a break and focus on the group and then come back to YouTube from August this year. But last week, one of my friends, a good friend of mine, reached out to me about a product that I think they've been working on. And I didn't want to do this, but I have to because I am the sort of person that I don't like anything outside the candlesticks, right? I focus mainly on the candlesticks because the candlesticks tells you all the stories that you need, okay? And I've been a fan of price action, hence I studied ICT, I still study ICT. But when he reached out to me with this product here, I decided, okay, let me have a look and test it out. And to my surprise, it's that good that I cannot wait till August because they are running, I think, some promotion right now. So I thought, let me just share this on my YouTube so that if you do find it helpful, you can actually use a link that I'm going to provide underneath this video, and you can, go and have a look for yourself. Okay. So what product did my friend share with me? It's actually an AI that they've developed, and basically they've backtested, I think, for 45 years. Yeah, they've backtested for 12 years. Okay, they've backtested 12 years on 30 different pairs. And they've also forward tested for a year and a half on these 30 different pairs, right? And basically what this tool does is it gives you a confidence vote in terms of the direction for the day. Okay, I'm going to repeat that again. The product that he showed to me is a product that gives you the bias for the day, right? And this product has been backtested for 12 years, or they've backtested 12 years of data on 30 different pairs. And at the same time, they've forward tested 1.5 years on that same 30 pairs, right? And what it does is during the New York session at exactly, I think this week I checked the timestamp and it was between 1-7, so 1300, roughly by this time, between Monday and Friday, you would have got the signal already. So if you look at my time zone here, 1307, between 1307 and 1308, that's when the signal comes out. And what it does is it gives you a confidence vote on which direction is price going to go for the day, meaning which direction is it going to go during that New York session, right? That's what it does. It gives you the direction for that New York session. Now, I think it's a fantastic tool to have for New York session traders. Even if you're a day trader, it's still a great tool to have because you will come into the day with a specific bias, right? You're going to come in with you're bullish or bearish for the day, okay? And I like it because it doesn't come in the London session. Now, you might ask why. why don't they, if it's that good, why don't they post it during the London session so you can get the high of the day or the low of the day? And my answer is, if you know that price is going to go up or down for the day, wouldn't it be better to sell or buy in New York session after London has posted the high of the day? Certainly, because if London posts the high of the day, if it's going to go down, then New York session is just going to be a continuation. So if you have the bias for the day in New York session, it's actually helpful because you don't have to think and guess where price is going to go. The problem that having this signal in London, which I think they've done a good job, is when London starts, you don't know where the high of the day is going to be, right? So if you try to predict the direction, let's say you come in with a long for the day, right? You think price is going to go up for the day. But at the beginning of the day, price starts going up. If price goes up for the London session, what is going to happen in New York session? Potentially reverse or even cap the high of the day. And you will not get the long that you're looking for because London already went up. So if you have the bias for long, then in New York session, if you get the signal, London has already gone up. So New York session is going to be just a continuation. So if you see price retracing, it will be a good, advantage for you to go long because price has already made the move up. So New York session will just be a retracement for it to continue going up. And I'll show you an example of what I mean. Let's say you were bullish on the Monday, 1st of May, okay? And you get a signal that for the day, price is going to go up. This is London, okay? And price didn't do anything. Now imagine if the signal comes in on during the London session, okay? You're going to struggle with, okay, where do I buy? Where do I put my stop loss? But if it comes in New York session, at least London has traded. So you will have somewhere to pivot in terms of if price is going to go up, this would have been London. Signal comes in roughly somewhere here and price is already retracing. So London low has formed, New York session retracement, and then you buy for continuation. Okay, this is just a true depiction of why it's very good for them to post the signal in the New York session. Plus, ICT has said himself, he would rather trade New York session rather than London because it's much easier. Okay. So with that said, this week I was monitoring the signals that were being pushed out. Monday, I didn't actually do anything because I don't trade on Mondays. So Monday is a day off for me. I mainly trade between Tuesdays and Friday. But I focus most of my trading during the New York session because that's where the trades are going to be moving because you have London and New York overlap. So on Tuesday, the signal came in and they initially, I'm going to show you the signal. Okay, bear with me 1 second. Okay, so as I said, I was going to show you the signal, right? Now, another reason why I'm doing the video, right, is because when I joined the group, okay, it was just 13 of us. I think I should have taken a screenshot of it. There was just 13 of us now, which was I joined on, I think, last Sunday. Okay, so this is when I joined. You can see it. Okay, and when I joined, there was just 13 people, and just within a week or less than a week, it's jumped up to 62. Now they've not officially launched yet, right? So they are running promotion, and hence I want to, share this so that if anyone wants to take advantage of it, you can. So on Tuesday, this is the signal that came. Like I said, they've not fully launched yet, but you will get access to, or is going to provide signals on, I think, more than these pairs, not just the majors and gold. You have the indices as well. Now, when the signal came, I focused on one pair, and it's a pair that I've been trading for a long time, which is Aussie. Okay, so Aussie gave a bearish confidence of 93 or 0.93. Now, that's all you're going to get. Now, it might not look like something shiny, or it's not telling you buy or sell, but trust me, that's all you need. That confidence vote, which is the 0.93, is all you need. It's telling you that on the May 16th, Aussie dollar is bearish, and the confidence vote is 0.93, meaning it's very high that the Aussie dollar is going to drop for the day. And like I said, you can see the timestamps that it comes in: 1307, 1308, 1307, 1307. So on Tuesday, when the signal came in, it was 0.93. And usually between Tuesday and Thursdays, that's when I do my live sessions with my students. So the signal came in and I was doing a live session. So sometimes I cannot, that's why I said I wanted to do this video in August, because I will be free and not be teaching. And I can actually do a live session on YouTube, but right now I can't. So at 1.7, the signal came in 0.93, and I was like, okay, cool. I was doing the live session, but I did pay attention to what the Aussie was doing. And this was Tuesday. And you can see I've colored my kill zones. There's a specific time of the day I like to take trades, and that's the red area and the green area. The green area is the New York session. So I'm going to drop down to the lower time frame, which is the 5-minute chart. Actually, let's start from the 15. So the signal comes in at exactly 1.7. So 1.7 will be roughly somewhere here. Okay, that's 1.7. So once I got the signal, I looked at price, and one of the PD arrays that I trade mostly is fair value gaps. Right? If you're an ICT trader, you have to gravitate towards to one PD array. You have to master one PD array. And that's the one that I like, because it's all about the gaps. So I kind of spend most of my time backtesting gaps, trading gaps. Gaps is everything. So when the signal came, I saw this dealing range, this high to the low, which landing high, and the low that was created. And then all I did was determine the fair value gap in premium. So between this high and that low, at the time of the signal, it brought me up here to this fair value gap. Now, prior to this, of course, I got to know about it just last Sunday. So I've been focusing mainly on price action. And over the weekend, I did my analysis, and this was my target for the week. I said price was going to come here for the week. Actually, it's a H4 fair value gap, but I went onto the lower time frame to kind of, I forgot the word to use. The word is not coming, but there's a word for it. The bigger time frame, which is the H4, the gap starts from somewhere here, but the H1, this is the gap. So that's where I was looking for price to trade to this week. So when I got in, to the trade up here, this was going to be my target. So for the whole week, I've been bearish on Aussie, and that too, okay, that I just shared with you, also confirmed it on every single day. Okay, so on Tuesday, that's where I got an entry, and I actually shared this on my Twitter. So I'm gonna show it to you right here. Okay, so this is my Twitter, Institute Trader, and I shared the trade right there. And this is on the 5-minute chart, right? So my target, as you can see, was on the downside. So the fair value gap, this is on the 5-minute chart, but I just showed you on the 15-minute chart. So if I go into the 5 minutes, you're gonna see that same area right there. Okay, so that's where I went short, stop loss above London's high, and then we're expecting price to trade down, and then it did. Right, and I held on to that trade. Why? Because this was going to be the target for the week. And then that's Tuesday. On Wednesday, which is the 17th, it gave another Aussie bearish. What time? 13.7. So let's go to the chart again and then go to Wednesday. So this was Wednesday, and the signal came in 13.7, which is right here. Okay, when the signal came in, I was, as usual, doing my live session with my students. So looking at price, this high to this low, this high to this low. Okay, what is the fair value gap that is within that range? Why did I use that and not this one? Because this is Asian range. So obviously that high is subject to being rated. If you know a bit about ICT, Asian range, high and low, is always going to be liquidity. So I ain't going to use this range. So I use the New York session range, right? Because London did form a low. Okay. So I did this high to that low. I'm going to go quickly on the 15 minutes chart, and then you're going to see another fair value gap right here. Okay. So that was where I wanted to go short. Right now, when I posted this, the trade idea, price had already moved away. So I was sharing on my Twitter based on my target for the week being down here, and based on the trade that I got in on Tuesday, yeah, that the bearishness is still in play. So let me show you the trade itself. So that was the 16th. Where is the 17th? There. Okay. So on the 17th, you can see that target is still there. That was in the H1. So this was the first trade during that time. And then the second trade was if price was to go and attack the Asian high, then you sell short again because it's bearish, price is going to go down. Okay. So the first range that I used, as you can see, is this one and that. And then, sorry, the first range is this one and that, which is the Asian range. But I understood, like I said, this is Asian high, so they can take it. And if they do, you sell short again and then look for continuation to the downside. Now, I'm not sharing, my signal or the trade idea. I'm just showing you the power of the two, which is that right there. That bearish confidence that it gives you helps you to be confident in that trade, because this has been back tested for 12 years, just Aussie. 12 years back testing, and 1 year, 1.5 year forward testing. Okay, so let's go back to the chart. So there was two ranges, one being here to there, and the second one was being here to there. And then the the Asian high did hold, went down, came back up, hold on to that trade, and then overnight price went down. Now, the best one for me was the one that happened on Thursday, because I thought this can't be true. It can't give me a bearish signal today as well. And then lo and behold, on Thursday, let's go ahead and look. Aussie dollar 96. Now pay attention to the numbers, okay, which is going to be relevant in my next videos that I'll do, because next week I'm going to be following it, and then I'll see if I can share the videos with you guys as well. Pay attention to the confidence numbers, okay, because something happened on Friday here, which I didn't take a trade, but I had a level that I was watching, and I actually posted it in my my Discord group with my students, where the level, the fair value gap that we were looking at for potential rejection, because we were anticipating price to go down. Okay, so on Thursday we had a 96, which was no brainer. This high, this low. Let's go to the H1. This was the landing high. This was the retracement starting from 9. Price came back up. There was no fair value gap for entry, but it just came right to missed OTE by a few pips. Now, I'm not gonna go into details of how I trade here. Just look at the movement down during that New York session. So the signal came in at right between this candle and that. So let me drop down to the 5. Right there. So at this candle, that's when the signal came. Okay. Right after that, price dropped. And then when it came, I shared again another trade, which was right here. That's the 18th, right? That price is gonna, because I was already short from Tuesday and Wednesday. So I didn't take any trade on Thursday, but I was sharing that this is where price is going, that 0.66016, which was this level. So it missed my level for the week by a few pips, but let's go to the H4 so you can see what I meant. So this is the H4 fair value gap between this candle's low and this candle's high, right? But I kind of trimmed it down to that H1, and it missed me by a few pips. Okay. Now, on Friday, obviously price rejected during the course of the overnight trading. And on Friday at 1, the signal came again. So if we go back to the 5-minute chart, right there, right? The signal came again. Now, let me show you the level that myself and my students, we were looking at. And then I'll go and show you in the Discord where I pointed them to. Now, how I got to that level, probably will not share it here, but later on in future. That level was right here. Let's go to the 15. There. How I came to that level, or how I arrived at that level, I'm not gonna talk about it, because that's what my students are learning, so I don't want to share it here. But that's exactly the level I was watching for price to sell off. Okay. That was Wednesday's high. That's all I can give. So it's a Wednesday's high, and there was a fair value gap above it. How we find the fair value gap, that's the mystery. Okay. So price rallied into that and then sold off. Okay. I took a trade on that one. I still have that trade on because I think you see in the Discord, I saw this as it was going up as a market maker buy model, but it's actually going up to go down. So this will be a sell, and we will trade through the areas of accumulation. Okay, so I'm going to pause the video right now, and I'm going to bring the level that I shared with my students in our Discord. Hey, so this is my Discord that I share my stuff with my students. It's just about 20 students. It's really tight group because I want all these serious students that want to spend time on the screen and learn, because this requires you to learn. It requires you to spend time on the screen. It requires you to be dedicated, and not a lot of people are willing to do that. You have many traders out there that wants to learn, but in reality, they don't. They want you to feed them. They want you to spoon feed them, and I'm not ready to do that. So that's why I've kept it as a tight group. I look at you, and thankfully, I'm gifted at seeing if someone is a student or not. So when I see you're a student, then I will obviously take you in. But right now, I'm not taking any more students because we've come a long way. But anyway, that was the gap, right? And I told them during the live session that I would want to see them take out Wednesday's high into that fair value gap and then reject and go lower. At the same time, looking at the dollar index, because we look at the dollar index to trade. So dollar index will trade into discount relative to this dealing range here. Now I'm teaching a little bit because that's what I do best. Right? Dollar index was going to trade inside this dealing range, to be specific, right here. Right? Remember I said I must have fair value gaps. So price was going to trade into that fair value gap and then reject and go high again. And Friday was going to be a down day. So there's no way Aussie dollar was going to drop for the entire day. Why? Because if you understand market maker buy and sell models, Friday was going to be a day of accumulation. They're buying in that day. Okay. So I anticipated that you're going to drop into that fair value gap and then reject. And when it's doing that, then you look at the Aussie, because it will go and attack Wednesday's high into that fair value gap and then reject. And that's what it did here. So I still have my trade on, looking for next week price to trade down. Okay. So on Friday, the signal, look at the number, 81. Why? Why was 96, 96, 93, and then 81? And then because it was 81, look what it did. That's the importance of the numbers. Okay, so the higher the number, the better. The lower the number, you don't want to really trade unless you understand price action that much. Then you can trade with a lower number. Obviously, having a price level in mind, then you can trade that. But in overall, I just want to say this is a fantastic tool if you know what you're doing. If you're a new trader, this is not for you. If you are still developing, I'll say it can help a little bit, but this will be mainly for traders that know what they're doing. Like, for example, myself and my students, they know what they're doing. So when the signal comes out, they will know exactly what to do with that signal, because it's not telling you to jump in and sell. It's telling you that for today, this is what price is going to do. And then knowing what you're doing with price, like I just, elaborated. I was not supposed to, but yeah, that's the teacher in me, right? Knowing what you're looking for, it can give you an easy, or I would say peaceful mindset in your trade. Because once you show, like for example, on Wednesday, shorten this range here and also shorten, like using that range, it will make no sense to a new trader. Why are you shorting here and then shorting up there? Because price can trade up there. So if it does trade up there, then you sell. It's not supposed to trade up there, but if it does, you sell again. And that's what we did. Okay. So this is all I wanted to share with you guys. It's a fantastic tool. I'm gonna leave my link, because you have to be invited to get in. You can, join directly from their Twitter. I'm gonna share their Twitter as well. Give me 1 second. Let's go to Twitter. Okay, you can join them directly through their Twitter by going to @Synapses Capital, or I'm gonna leave a link below this video. If you want to join using my link, by all means, feel free. So that's it. All right. For those of you that wants to learn from me, you will have to wait till August, because right now I am I'm dedicating my time with the few students that I have. And after the August, then I will see what I will do. Maybe I'll come back to social media, doing YouTube and everything. I've still not decided yet, but hopefully something will happen, right? So hopefully you did find this helpful. If you need more information, you can reach me. I'll leave my Telegram below the video and my Discord. If you want to reach me, feel free. So then, peace.